Dr. Mark Faber, editor and publisher of the Gloom, Boom, and Doom Report, joins me now from Chiang Mai, Thailand. Dr. Faber, how are you, sir?
Very well, thank you, and I hope the same for you.
Yes, very well as well. Thanks. Dr. Faber, let's dive right into this era that we're now firmly deep in. One might say knee deep or waist deep in the creative policy of financial elites globally that has resulted in negative interest rate environment. A thing I'm sure you never thought you'd see, and something I'm surprised is actually passing as legitimate in the global perception. But where are we at in the de-evolution of the fiat currencies currently that are so bloated by debt that they are paying negative interest? And what does that mean for precious metals?
Well, let's put it this way. I'm just writing a report because I have this monthly report about what I really never expected in my life, neither when I was growing up, nor as when I was starting to work and studying. And negative interest rates, I had read about them in the economic literature. And even at school, we discussed a character called Silvio Gesell, because my teacher thought he was a nutcase, and he was a socialist communist who had lived for a while in Switzerland. But that I would see in practice less than zero interest rates, in other words, negative interest rates, this is something I really never expected in my life.
Yeah, exactly. And so how does the justification, how does the logic work for you?
Well, the logic goes like this. Basically, the central bank says, if we have say a depression like in the 30s where the price level dropped by 30%, then we should have interest rates that are also like minus 25% in order to cushion the negative impact of the recession. But to that I respond, the problem of a depression is that it was caused by a previous boom that the central banks or the monetary authorities should have addressed. And actually, if a boom or a speculative bubble bursts, it is useful to let it burst because it cleans out the system. And post 2009, this was never done. So we have zombie banks, we have zombie characters at central banks, we have zombie central banks, we have zombie governments, we have zombie countries. Everything has been artificially popped up through very low interest rates or zero interest rates as we had in the US, and negative interest rates as we had in Japan and in Europe. But as you can see, in Europe, the banks are essentially, they're going to go essentially bankrupt. And I think they will be taken over by the government. You understand, this negative interest rate policy is basically a tool to bring socialism about. This is what it is.
Wow. That's astounding. So correct me if I'm wrong. This means that when I go to the bank machine, if we were going to play on an even and fair playing field and I want to take out $100, it should give me $102.
Well, yes, correct. If you inject $100, you will only get, if you're lucky, 99. If you have bad luck and some academics have their way, the zombie academics that write papers at Harvard and books and are consultants to the Fed, you'll only get 90.
Wow, this is crazy. So
this is crazy.
This is why I actually started buying physical gold back in September, and for the first time in my life, I feel like I've done something smart with my money.
Yeah, that's wonderful. But you should have bought gold all your life. I buy every month for the last 40 years.
Wow.
So I think it's not 100% foolproof investment, because the academics at central banks and in governments and the socialists that come along, they may take it away one day from you. So you better hide it safely.
Well, that's interesting. You know, the conversation surrounding gold in times of, global geopolitical unrest has always interested me because on the one hand, yes, if you have bought gold your whole life and you have successfully hidden it from the government, there will be a long lineup of people looking for you to take your gold off of you. So on the one hand, it makes you quite the target. On the other hand, you won't starve like anybody else, at least not until somebody takes it off of you. So all that aside, I'm doing the math on the total inventory of fiat liquidity in the world, and I'm including debt and currency that has been derived from what I consider a 10x of the debt. And to me, that suggests that a potential, if I was to have to replace that fiat liquidity and represent it in gold, I would need a gold price of $53,000 an ounce to start. And I haven't even included the delinquent obligations of the U.S. Social Security system. So we're looking at 1,500 gold today and higher. Where does this sudden emergence of this, what I view as a crisis as yet unidentified, where does this take the gold price in the near term?
Well, basically, I've written about this also. I said, if in March, Bitcoins could reach a low of $3,200, and within 2 months they went to over 12,000, I mean, gold could easily go up 30-40% from the recent low. And my sense is that the trend will be up, and let me explain you why. Most institutions are run by zombies as well. These are people, they look at the index and they have to weight their portfolios according to the index, otherwise the trustees give them a hard time and so forth. These people have hardly any gold. Now, the trustees, who are also zombies, they will one day ask these people, why don't you own some gold and silver and platinum? Because they are going up and everything else is going down. So then the trustees, in their ultimate wisdom, after gold has risen already substantially, they'll say, well, you better invest of your endowment fund or pension fund, maybe 3%, maybe 5%, maybe 8% or 10% in gold. And as you correctly pointed out, if you actually add up all these components of money in the world, then you come to a very high gold price. But I personally, I would be worried if the gold price goes up too much, because then the socialists and the central banks will make the case that these are unusual times. We have to take the gold away. That is what I fear the most. As long as it doesn't go up too much, we're probably safe. Okay. But if we really go up ballistically and other assets go down, then we might have a problem.
Okay, so how does the individual protect themselves against such a scenario? What other asset class is there?
Well, he can buy gold shares. He can buy, probably silver is safer than gold, or probably platinum is safer than gold. And as you know, a lot of people, especially, I always say you have to look at what the Jewish community does. The Jewish community has bought a lot of art. Right. Because it's very seldom that art is expropriated. It was expropriated and stolen during World War II by the Germans, but otherwise, it's very unusual that someone would come into your apartment and say, oh, there's a Picasso there, I take it. Yeah. But gold is an asset that has kind of a monetary value, and knowing the level, or I should say low level of intelligence of central bankers, I would not rule out that they will take it away from you.
That's fascinating. Dr. Faber, we're going to leave it there for now, but I'm going to come back to you regularly now that we're back into the gold bull market. Thank you very much for joining me today.
Yes. I hope we're in the bull market. Thank you very much.
Okay,
Bye
bye for
bye.
now.
Coffee.